if you do some swing trading in the markets or you do some day trading or any kind of trading short term, you'll probably be feeling the same way as me right now, which is a little bit frustrated. And that's why. Why is that so? Because right now the market's not really going in any general direction. It's just kind of trading in a range and nothing's really moving. Okay, so it's not going long, it's not going short, it's just consolidating in that area. Okay, whether it'll be going long or short in the future, no one will know. But in this kind of choppy ranged markets, okay, it's very hard to capture massive trends. Okay, so again, your profits and your trading strategy would have to change because right now, all the markets and the swings in the markets is very short term. Okay, it goes green one day, next day it becomes red, then it becomes green, then it becomes another green, then red, red, green, green. So it's like there's no clear trend. There's no green, 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 red, green, 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 red, and red, red, green, red, 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 green. So there's no particular pattern or swinging in any general direction. This makes it especially hard, especially if you want to predict or you want to do swing trading for the longer term time frame. Okay, so because this is very important as we want to capture bigger trends, bigger profits. Hence, your trading strategy will have to change where you will have to take smaller profits and quickly secure your profits in case the market reverses against you very quickly. So keep that in mind when I'm giving my top 3 swing trade stocks for this coming week. Right now, okay, if you do not know who I am, I'm the Stock Estate. I'm a former financial advisor, and my channel right here is to help those new swing traders and take you along with my journey of swing trading. And I hope we all can learn from each other and become better swing traders, consistent, long-term, very good swing traders. Because what I want to aim for is we want to aim to minimize our losses while maximizing our gain. So if you like any kind of this kind of content, I do this show every single week. During the weekends, I post one video, and I hope you will gain a lot of value out of this as I explain to you my thought process in trading the stock. I don't just give you the stock, I explain to you my thought processes as well as I follow up with last week's picks as well. And this is how the entire video is going to be like. No worries, it's going to be timestamped, so feel free to skip around to the parts that you are interested in. And without further ado, just jump straight into the video. So just look at an overall look at the markets, right? As I said in the introduction of the video, S&P 500 choppy, Dow Industrials very choppy, range market. There's no clear signs. It's just retracing back to the 15 moving average before whether it goes higher or goes lower, we shall see. And even a lot of the sectors, such as consumer discretionary, consumer staples, energy, all of them are consolidating in this area over here where they're not really moving much except for maybe real estate or financials are a little bit higher, technology. Again, this range right here, although the swings are much more rapid, but again, the bigger the swings in that particular technology or that sector, the better it is for swing traders because we're able to capture a bigger swing, a bigger profit. So again, later when I explain my top 3 swing trade stocks video, I'll actually be focusing a little bit more on the tech sector. So let me just run through this. You can see generally all the markets are in a trend, and let's jump into the first company. All right. So the first company I'm going to talk about is actually Sklz. Cathie Wood's, one of Cathie Wood's favorite per se, or one of the stocks that she has in her fund. And you can see that from the 1 day time frame, right? This company has been taking a pretty hefty beating, pretty hefty beating, if I do say so myself. It's pretty hefty, It has been on a downtrend from all the way from its highs, right? All the way to now is really, really quite amazing, From its highs of more than $44, right? $43 down to the low of $12, which was its consolidation area back in November. So you can see it was like a mountain hill, right? And in fact, a lot of technology stocks look like this, especially those high-flying growth multiple companies, especially those who doesn't have any revenue. So this looks like up and bam, down again, And most of the time, when this kind of thing happens, right, when these kind of large swings happen, it is most often than not a overreaction from the markets. The markets like to overreact. They tend to overcorrect. So here, this run up, right, maybe the true value is around here, at 25. So it's hypothetically, right, $25. This stock is hypothetically valued at $25 intrinsically, right? So they like to overreact. They think that, it's pretty good, higher, higher, higher. Then they keep pushing the price higher all the way over to $43. And when it corrects to here, go up again, a lot of fear and FUD in the market, and everything just overcorrects back to $13. So as swing traders, we can take advantage of this kind of huge swings in the market by identifying where are the sentiment of the market. So you can see, if you was going up here, okay, chasing the markets, you can do a short-term trading is good. While it's bearish, okay, we want to wait for it to find a bottom and break the 20 moving average. You can see 20 moving average is quite respected. Okay, when it's above it, it's in a trend, but when it closes below it and gets rejected below the 20 moving average, then it is a downtrend. You can see downtrend. Okay, so important part over here, right? This is actually a trend reversal play. Okay, and I'll actually you can go and check out my video on trend reversals. So that is in my playlist, in my stochastic playlist. Go and look at it if you haven't done so. Subscribe to the channel and like the video, okay, if you appreciate this kind of tutorial-based content. So now, if it gets rejected over here and goes back down again, right, then we will not want to buy in, because why? That means there's still a lot of bearish sentiment on this company, and there's not a lot of buyers stepping in to buy at this area. So again, if it gets rejected, down here and back down here, right, nope, we're not going to buy. Okay, but however, you can see it closed strongly above, and when people start to sell it back down, there is a certain support over here, bam, and it sort of bounce away from this area. So again, the significant level to look at, right, is this area over here, the $17 level, $17. Okay, you have to look at this as well. And it broke above the 20 moving average and closed above it. And we will have to look at Monday's price movement very, very closely to determine whether it's going to be a swing trade that we want to enter. So for anyone that's looking at this stochastic trading, okay, I like to look at these things called the LATE format, the late format. Okay. First, we want to do LATE because this is a trading plan that I crafted myself, that I use personally myself. Whenever I enter a trade, I will use this LATE format. Okay, if you go in a trade blindly, okay, you are planning to fail. If you go in without a plan, I'm pretty sure you heard that many times before. So, right now, right, what's L? Okay, let me just run through my thought process. Long-term trend. Okay, so long-term trend is actually not in a long-term uptrend. You can see that up and close below the 100 moving average, it is considered in a sense a bearish trend. So when you're playing this kind of bearish trend and a trend reversal move, right? When trend reversal means when it hits a bottom downtrend, it reverses and is signifier of a new trend upwards. But this kind of counter trend trade below the 100 moving average, this is what I call a counter trend trade. That means you're going against the trend, right? This downturn trend. That means you're trying to go against the trend, and that is not very in a sense, the risk versus reward is a little bit, the risk is a little bit higher. So you have to be a little bit more careful in taking profits and quickly secure profits if it hits a certain resistance that you feel this might be the max that you can go, and you'll go lower. So what do I mean by that? So for example, okay, you really have a trend reversal. Next day, candle open up here, goes up higher, right? Then you can see this 100 moving average over here. Okay, so it goes up higher, then gets rejected at the 100 moving average, down again, right? Okay, so at this point of time, right, there's two choices. Okay, either it breaks down further, okay, or it goes up higher again. So if it breaks down further all the way here, right, okay, then you might want to consider scaling out your position over here, because it suggests that this 100 moving average is a potential resistant area, which might signify that it will bounce off here and continue in a downtrend. So again, it's still in the overall downtrend because there's still a lot of bearish sentiment. So again, this kind of play, right, you have to be very smart and very quick in taking profits. Okay, it's not wise, right, to say, I'm going to buy in here. Okay, let me just clear my drawings, right? It's not wise to say, okay, I'm going to just buy in here and I want to swing it all the way to $40. Okay, most likely and not, this reward over here, right, is not feasible. It's not realistic. Okay, so as swing traders, you got to be a realistic person. Okay, you got to think it through in terms of risk versus reward, as well as the potential buyers or sellers that may step in. Okay, because if you think of it as this price candles as people, not price, right? What do I mean by people? Because people who bought over here, right? There's people who have bought over here. You see green candles over here, right? There's people who have bought over here. There's people who have bought over here. There's people over here who have bought over here and over here as well. So when you see there's a lot of people buying over here, right, that means, right now they are in the red. Okay, they are bag holders. They are people who are holding the bags. Okay, when they bought over here, it dumped even further, right? Right now, they are just waiting. They're like, please, okay, let the price come back up to my area and I'll sell it away. Okay, so you must think of it as there are people who bought into those areas and right now are in the red, are in the painful red, who are holding the bags, right? And they really want to get it out. Okay, they want to sell out the position, sell out skills. They'll be like, oh my god, I made a stupid mistake. I didn't put my stop loss. So put your stop loss, everyone. They're like, oh, didn't put my stop loss, and I'm just waiting for this to go back up and I'll sell it. So you can see this first green candle over here, right? This area this area, $24, $23, is a potential area where people will want to sell and selling pressure will step in. So this area, you gotta be very, very careful and maybe scale half of your positions out and leave half of them to see whether it can stage a further breakout. If the some fundamental news come out, like for example, Skills recorded maybe 3,000% year-over-year growth, then everybody's like, oh my god, institutions starts coming in and it goes up all the way to the sky, right? So this is excluding just technical analysis based, right? This is how we want to look at things. Where does potential sellers step into place? Okay, I hope this is a very good mindset that you will retain from this entire video itself. As every single week when I give you my top 3 swing trade stocks video, I'm trying to educate you and teach you something along the way by giving real life examples so that you are able to take away something. So I'm not just giving the stocks, hey, you go do yourself, right? I'm giving the stocks, I'm telling you, what's my thought process, and hopefully you are able to, learn something from it, okay, and add in your own insights and make you a better swing trader itself. So let's go back to my stock estate trading. Okay, so long-term trend, counter-trend trade, we have to be a little bit more careful. Now, area of value. Area of value, where's the area of value? Area of value, again, it will be at the moving average over here. You want to see a strong close, okay? So example, let me draw again. Let me just clear all my drawings, right? So this is the 20 moving average that I'm drawing. Okay, I want to see a strong close that bounces above the 20 moving average, and I want to take a position over here to swing it up to the further upside over here. Okay, it can be a short trade or be a long trade, a bit longer trade. But again, this area over here, right, is a potential selling area because there are a lot of people holding the bags over here. A lot of people holding the bags over here. So you got to be a little bit more careful when it comes to this area. Okay, so let me just get this out of the way. Okay, so this is the area of value that I want to buy in, because if you buy away from a area which is so far away, right? So for example, okay, you wait for it to go so far away, it rallies up all the way higher, all the way up here, right? Then you take a position here. Does it make sense? Does it make sense? It came away so far away from the area of value. Area of value is a area like a moving average, a trend line, a support. Okay, that a lot of people potentially step into buy. But if you buy in so much already, in a sense, you're just chasing the highs. Okay, so again, you want to wait for it to come down a little bit more, then you buy in. So again, anywhere near the moving average is a potential buy. So that's the area of value. Now we look at the trigger to enter. Again, trigger enter, I kind of covered it already. You want to look for a strong close above this area for us to buy in. Okay, and if you want to set yourself up for a little bit more of a closer look, we can go into the 1 hour time frame, which I use quite often. Okay, so you can see very strongly, right, there is a support, kind of a support over here. Let me draw my doodle over here. There's a support over here near this area. Okay, these 2 lines over here, this is a support. Okay, from the $16.50 area to the $17.33 area, there's a potential area. If it breaks below this area, okay, if it breaks below this area, then that is a fail of the counter trend and it's gonna hit back down again. So this area is a very significant area where we want to look for it to hold its support. So again, I'm gonna wait again for this to come up. So this is the support area, right? So now it's trading below the moving average. It's gonna flatten out, and if it holds above this and the moving average touch and it crosses over the 20 moving average over here and goes up, and I take a position over here. And that's what I mean by taking a closer look at a 1 hour time frame, right? So that to time your entry a little bit better, because looking at the 1 day time frame, sometimes we can't really time it very well, because you see what I wrote there, right? It's so small, okay, I can't really see, right? But 1 hour time frame is a good way to time your entry a little bit better. So that's the trigger to enter. So exit strategy, as I said, that's the most important part. A lot of people talk about long-term trend, area of value, trigger, enter, then they forget about the exit strategy. Okay, they don't know where to sell, where to take profits. So take profits, I already told you, okay, it's that area where a lot of potential back holders are actually selling away, because this is a counter trend trade, and as well as your stop loss must be at a reasonable area. So where is the reasonable area that I'm talking about? So let's zoom in a little bit more, right? Okay, so stop loss, you can actually put a little bit. So you see this area of bias over here. People are going to buy at this area because this is a potential area of value. So we can set it, the stop loss, around somewhere below the area. Okay, why don't you want to set inside here? Because more often than not, the markets are quite volatile, especially for companies like Skills. They can close down and close back up again and just take your stop loss out. Then after it proceeds to rally higher, then you'll be like, oh my god, I got stop hunted. Then it stopped you out from an otherwise very, very good trade. But you might be saying like, hey, why don't I just don't put any stop loss? Okay, but if you don't put any stop loss, okay, who says that this area or this area, right, it can't go lower? low can go lower, okay? You might think that this is the absolute worst, right? Okay, if anything worse happens, it can go lower and lower and until the company gets delisted, okay? I mean, there's still a chance, okay? There's nothing certain in the market. So again, you want to protect your downside, okay? You don't want to be like people over here who bought in. Okay, people who over here who bought in and got dumped all the way here and just waiting and their capital is locked inside this losing trade. Okay, because the capital could be generating return on investment on other trades. So you don't want to lock in your capital. All right, so that's for skills itself. Okay, profit target, as I said, it's around here, the $27 level. You gotta start taking some profits. Stop loss, okay, up to you to how much depends on how much risk you are willing to take, how much you are willing to lose. Then you have to scale in your position accordingly. So, example, if your stop loss is around $1 wide, right? Then your own risk management or your own comfortable level is to lose $50. Then again, you have to scale your position to get only 50 shares because 50 times $1 is $50. So again, if you're only comfortable, you're losing $50. But once you leave, you scale your positions too wide, right, to become $100, then you might become very emotional when it is too much of an amount. Then you actually make a lot of mistakes, when you try to scale off a position. Okay, so many ways to exit our positions as well. Okay, you can get stopped out, you can get trailing stopped, you can profit take, you can reach a profit taking level when there's a better opportunity. There's a few of these right here. You can screenshot this, pause this video. Okay, this is the extra stuff that I want to give it to you, so that you are able to reference something. Okay, so that is for skills. Okay, I've been talking for a very long time already. Okay, and I hope you learned something from this long thought process that I have right here. And I'll always give a very in-depth analysis on the first stock. Okay, then the two others is stocks that have a pretty good setup. But again, I will want you to try it out on your own. Okay, because if I break down everything for you, firstly, you would become very reliant on me, which I do not want that. I want you to learn by yourself. And second, right, this video will be like 1 hour long. Okay, so I don't want to bore you the too many details. Okay, but I'll just give you the stocks right away. So first, the other company which has very good potential, awesome potential, right, is Calix, Calix. Okay, Calix is a company is in the technology space. Okay, and this company, right, has been doing pretty well. They top earnings and revenue estimates. Okay, we want to trade strong companies. Okay, companies that are very strong, that have a very good network, and they are most often than not, right, stronger companies that are strong fundamentally will sustain its rally upwards. And if you're a long company like me, okay, I only trade, I don't short companies, I only buy the dips, buy low, sell high. Okay, I do this kind of very simple trading for you guys as well. For us, we want to trade strong companies, okay, that will go higher and higher and higher, and we trade the swings in between. Okay, so these are the companies like that. So if you wish to know a little bit more about what Calix does, okay, you can go research on your own. But again, as for short-term swing traders, we don't really care about what it actually does, but as long as its fundamentals are kind of good, the sales are good, the revenues are good, kind of good, and as well as the price movement is awesome. Okay, so the price movement, very nice. Okay, it's very predictable in a sense, because you can see it's often following the 20 moving average, up, down, huge sell off, breaks up, down. Okay, more often than not, okay, if you want to ask me for a what's going to happen, right, it's probably going to follow this 20 moving average again, moving upwards. So again, this kind of swings right over here, you can see this swing over here. Let me draw it up for you. Okay, let me first set up the support resistance level for you first in a 1 hour, 1 day time frame. Okay, one support resistance over here. Okay, but you look at this, right? Okay, this swing over here. Okay, very easy to capture one swing over here, one swing over here, one swing over here. Okay, because more often than not, I feel that this 20 moving average will be over here. You will swing up, swing down, swing up, swing down. Something bad happens, bam, then you will go down. Then you have a stop loss over here to stop you out. So again, this one swing over here, right? This one swing over here is how much? Let's get drawings. It's around $41 to $47. Okay, that's a $6 profit, right? From $42. And that is a decent over 10% profit. Okay, any swings over 10% is pretty awesome. Okay, 5% I will take it as well. 10% plus, it is a great, very good trade setup. Okay, because compared to S&P 500, right, it's not that volatile. Okay, so this kind of companies, I would like it. And every time it hits a certain area over here, right, it gets sold off back down to the 41 law level. So these swings are very nice to do. So reference it to my stochastic trading long-term LATE format. Okay, and show me how you're going to swing trade this. Okay, maybe I'll learn something from you as well. Okay, so the second company is CALX, Calix. And the third company I'm going to talk about is United Microelectronics Corporation, UMC. Okay, it's in the semiconductor space. And as I said, semiconductors are bound to rebound a little bit stronger, as I felt that this sector is a little bit more undervalued, and it's also in the technological sector. So now we look at the 1 day time frame, right? 1 day time frame. Okay, 1 day time frames over here. It's not very similar to CALX, I mean, but UMC, okay, it is in the trend over here, but it broke down below same area over here, and it's been a long-term uptrend, and recently it has sold off heavily to almost the 20 moving average over here. So it's the 20 moving average over here. It might sold off. Okay, then again, I'll give you a few tips here and there. We want to wait for it to close up strongly over here. Then you might want to take a position up to swing to the resistance area over here, where people might actually sell it back down. So the area over here can be $9 to $11, $10 to $11, and that's actually a pretty decent 10% as well. So again, these kind of swings are very good, and I did a lot of research to cherry pick these companies for you. So again, if you appreciate this kind of effort, this work that I do every single week for you, do hit the thumbs up button, okay, and subscribe to my channel, okay. Just a quick pause. I'm really appreciative for everyone who are still watching the video right now and have been subscribed and liking my videos and watching my videos from the start. Okay, right now we are at 900 plus subscribers. Okay, I'm very grateful for every single one of you here. I know it's not a huge number, but I'm very grateful that all 900 of you are gaining some value out of these videos, and what I'm doing is not for naught. So if you really like this channel, spread the word, okay, to your friends and families, okay, or people who are just interested in swing trading overall, because again, the goal of this channel over here is to let you become a very, very good swing trader and not lose too much money in the markets, because I see too many people just blindly, right, jumping into trades, okay, swing trades, just jumping inside, right, and just taking recommendations from people, knowing that in a sense, there's no perfect recommendations, because we can't really control or predict the market per se. So what can we control? We only can control our risk. And that's what my channel is all about, controlling your risk by buying at the right areas and setting your stop losses and profit taking at the right areas. Okay, you do not want to be like the skills one, right, where people just buy in blindly and didn't set a stop loss and just get dumped. And those are all hard-earned money that people have earned. So again, if you like this kind of course, this kind of the mission of this channel, okay, do help to promote it, okay. And again, I really, really do appreciate your support. Thank you very much. Okay, so quick break over there, right? So UMC, okay, that is the plan. I do want you to try it out on your own of your trade plan. How do you set up a trade plan for this company? And comment down in the sections below, and I want to hear from you as well. So those are the top 3 swing trade stocks for this coming week, okay? And again, I do emphasize that it is in a range market, a very, very indecisive market where everything's still consolidating, especially the growth stocks, right? So we're just waiting for the big institutions, one big institutions to come in, for it to or pull out, okay, to signify the next move upwards, or a retracement down to the lower moving average. So there's going to be a little tipping point over here. So what we can do to set our stop loss and profit take a little bit quicker, whenever you see that the market's starting to become a little bit weak, overall market's a little bit weak, right, start to profit take here and there. If you don't know how to read the overall markets, okay, go to my playlist. I have a overall trend looking markets tutorial, which is actually at the front page of my entire channel. So go and look at it as well. I can show you over here in the swing trade tutorials area. All right, so update on last week's picks. So quick one, charge point. Okay, look at the past 5 days. Okay, Monday, okay, if you entered, okay, you will have swung it up a good 8%. Okay, before it gets dumped. Okay, so again, this is a very, very strong company to swing trade, because you can see each swings, right, are 10%. Each swings at 10%. But again, it's not realistic. Because why? What lessons that we can learn here? Because you can't really time the exact bottom or the top. Because if I say that, hey, you can swing trade all the way up here to maximum profit, right? Not really. Okay, because most of the time you will swing out to here, hit its resistance, then you see it start dumping, right? And makes a lower low, right? And you will exit out of your positions. Okay, so again, the swing trade for me, it was around a 5% swing trade. I'm good with that. And I exited quite early because I thought that it's going to be a rejection and down to the downside. So charge point was a small win for us last week. So it's not going to consolidate in this area. And looking at the 6-month time frame, you see it's consolidating. Whether it will go down or up, you really have to look at the overall markets. It's very, very choppy right now. So BEAM, a huge winner for us. Okay, 5 days. Okay, if you bought in over here, it has I got a good 7% profits on BEAM. And I think one of my subscribers actually put their trade plans down there about BAM and how he's going to trade it as a descending triangle. So good job on that. Okay, all the credit is for you for, you know, setting up a trade plan and buying and selling the areas. Then after that, if you set a stop loss, you adjusted a stop loss up here, you will be stopped out, and you might even have taken a second swing up to the further upside, but I didn't. I went to another stock to swing trade. So yeah, so if you manage to swing trade this, good job for you. Okay, so and last stock, okay, is HIMS. This is in a sense, I would say it wasn't a loser or winner. We didn't gain much out of this because 5 days, right? As I said, it could swing up to $15, but it didn't. It goes up to $14.50 and it just goes down and kind of died halfway. And I kind of scaled out my positions and I got stopped out. So I only got like 0.5% out of this trade. So it was neither a win nor a loss. So it was a disappointing one. Okay, in a sense, it was a loss as well because it was a cost or opportunity cost. Okay, this capital could be deployed somewhere else, but in trading, again, as I said, you can never predict 100% what are the winning stuff. Okay, so I got 2 winners, one kind of loser. I still win overall. All right, in these kind of choppy markets, I'm very, very grateful. So that's it for today's video. Okay, I hope that you learned quite a lot from this video itself, and I would advise everyone, to although this is not financial advice or anything, but do be very careful in the markets where there's over euphoria. And when everyone else is getting a little bit depressed, a little bit tired, okay, that's where you are able to take advantage to build out positions. Okay, and long-term investing wise, I've been building up my long-term investments a lot, like Teladoc, buying, okay, because I read this earnings call, huge potential, okay, huge potential, but severely beaten down because of short-term FUD in a sense. So use this chance to build up your longer term positions. And if you wanted me to talk about my long term investments as well, I think I'm trying to aim for a video about that as well. So do show that video when it comes out some support and like, and I shall see you again in the next video. Stock stayed out.